Welcome to Chapter 3, everybody's favorite subject to hate, and that is taxes in your financial plan. And we start with a few quotes from famous people from the past. In this world, nothing is certain but death and taxes. Yeah, I'm sure you've heard this quote before. It's from good old Benjamin Franklin, a statesman, an inventor, an author. I mean, this guy was very, very sharp. And not only did he invent things such as the potbelly stove, you would have thought they would have figured it out by then. No, bifocals he proposed. I don't think he was the only one, but he was the one who made it popular. Daylight savings time. Ben was also, more than probably anyone else during the American Revolution, the one person most responsible for the ragtag bunch of colonists becoming the United States of America. Why? Because Ben was very shrewd, and he got the other superpower of the time, the French, in on the side of the colonies. Yeah, he was a very popular guy in France. Our next quote is, "Taxes are the price we pay for a civilized society." You will hear people rag up and down, but Oliver Wendell Holmes Jr., a Civil War veteran and one of the longest-serving Supreme Court judges, reminds us that, hey, we want to live in a modern, civilized society, we got to pay taxes. Exactly. Do you know how much it costs to keep that aircraft carrier floating at the dock? Just not going anywhere? Or how much it costs for a traffic light? I have a hard time believing, but a traffic light at a moderately sized, regular big sized intersection, $300,000. And then our last quote is from Leona Helmsley. "Only the little people pay taxes." And who is she? She was a hotel owner, a fashion designer, a prison inmate. Dear students, somewhere along the line, you might have already heard it, you're going to hear the spiel that taxes are voluntary, taxes are illegal, taxes are unconstitutional, you don't have to pay your taxes, you can become a sovereign people, unassociated with the government. Don't believe it for 1 minute, folks. Don't believe it for 1 minute. Who makes the laws in these United Snakes of Armenia? United States of America. Who makes the laws? The legislature, our representatives, Congress, the House of Representatives, the Senate at the federal level, the state legislatures, the city councils and the like, the county supervisors. They make the laws. In other words, we do. Our representatives make them on our behalf. Who executes the laws? A little bit of a civics lesson here, folks. The executive branch, the presidency, right? The office of the governor, the mayor, yes. But who adjudicates? Who interprets the laws? That's the role of the judiciary. The guys and gals in the big black robes looking down upon you with their gavel. And they have consistently said that no, taxes are not voluntary. You must pay your taxes. And when these yahoos get in front of the judge and say, Your Honor, show me where it says that I have to pay my taxes. You know what they do? Do they show them? No, they just say, here you go. Here's your penalty. Maybe you go to jail. Maybe you pay a fine. Maybe you get hauled off for psychological counseling. They're not going to tell you where it is. They're just going to say, you got to do this. I hear that they let people serve their sentence on the weekends. Then you get to go to work during the... Anyway, let's continue. Slide number 2. Taxes and financial planning. Now we're going to teach you how to be a tax preparer. Almost! You're going to learn in this chapter how to do a typical homeowner's tax return. And you'll find it's really not as hard as people make it out to be. We have an entire course in taxes, and it is an awesome course. And then there are social service agencies in the South Bay that train people to they train people to be tax preparers, and they certify them. For free. What's really in return? You agree to do volunteer work for the agency, but you get a career out of the deal. Not a bad deal in my humble opinion. So we're going to now first take a look at taxes and financial planning. And what you want to think about, folks, is eventually once you've joined the benevolent machine and are trading your paycheck, your life for your paycheck, and your paycheck for the rent, the mortgage, the orthodontia, the car payment, you're going to be paying about 1/3 to the government. And so there's a cute little ceremony it's not quite 1/3. It's, for most people it's less, but May Day, 1/3 into the year, 1st of May, has become Tax Freedom Day. You're working for the government January, February, March, April, and then you get to work for yourself the rest. It's something to think about. And it's not really May for most people. It's somewhere in April. And some people it's January. Understanding tax rules and regulations can help you reduce your tax liability. Well, we'll discuss what those ways to reduce your taxes. And to help you cope with the many types of taxes, you should know current tax laws as they affect you and make purchase and investment decisions that reduce your tax liability. Be careful! Some tax advantage investments are good deals, but not all, especially for the little people. Once you're starting to make serious money, then it would make sense for you to seek out these tax advantage investments. But for the most part, most of us know. And complete tax records must be maintained, or so says the IRS. So far, I've kept pretty much everything, but I've lost a few things, and I've never been called on it yet. So, slide number 3. There are 4 types of taxes. Taxes on purchases. Those are sales taxes, and then sometimes there's special excise and environmental taxes and use taxes, tires for the like. For if you got to have a hazardous waste fee, it's called, right? And then the environmental fee on electronics devices, and then cans and bottles and the like. Taxes on property tax, real estate, and then personal property taxes. For most of us, that will be our DMV. In California, it's called the vehicle license fee, and that's a personal property tax. Taxes on wealth, well, we don't do that anymore until you're dead. And then it affects very few people. We'll discuss this in detail in Chapter 14. But folks, this used to be the major way that governments and religions, because 2,000 years ago in biblical times, the government and the religion were one and the same. They were basically the same thing. And what they would do is every year they'd send out the tax collectors and they would assess your value. And you gave 10% to the government. Tithing. You see, it's still in the English language. And when people give to their religion, they call it tithing. And it used to mean 10%, but it doesn't, you don't have to give 10% nowadays. But some people still do. And that's why tax collectors were 2 of the most hated groups. That's, that guy Jesus of Nazareth, that radical, who used to hang out with those 2 hated groups in biblical times, tax collectors and women. Yeah. A very dangerous individual. a liberal, in my humble opinion. Needs to be stomped out. But not anymore. No, taxes on wealth do not affect you unless you have a very large sum of money. It's over $5 million, and double it if you're married. And we'll discuss that in Chapter 14 at the end of the semester. Here, the last one. This is the one. Income tax, the earnings tax. This has replaced the wealth tax as the major tax assessment on our income, on our wealth. It's income tax. There is, on slide number 4, a fifth type of tax, but we call it we often call these payroll taxes, but they're not technically taxes. Let's read at the bottom. Social Security and Medicare contributions are not technically taxes, but for personal financial planning purposes, it makes sense for us to think of them as taxes. We just lump them in together. And as they are often called payroll taxes. Now, what is the tax on Social Security? Well, it's 6.2% of your gross salary up to a certain amount, and that amount goes up with inflation. It's about close to $120,000 in 2015. And then 1.45% for Medicare, and there's no cap on that. So about 8%, a little less than 8%. People, when they realize that the very wealthy pay a smaller percentage of payroll in Social Security taxes, they sometimes get a little upset, and there's an argument for that, but there's an argument for the other way because there's a cap on how much you're going to take out in Social Security, so it gets a little complicated. We're not going to get into it, but you will hear people scream up and down that Social Security is going broke. They are not right. It is not going broke. It's a little underfunded, and we'll work that out. We'll discuss that in Chapter 14. Medicare is going broke. Yeah, but it's not because Medicare is a bad system. It's because healthcare is bankrupting us, and we refuse to deal with it effectively. Instead, we like to yell and scream and holler at each other. So, and again, we will deal with this. We'll talk about this in detail in Chapter 9. If you are self-employed, that's a joke. I apologize. I can't help myself. If you're self-employed, you pay twice that amount. Why? Well, not quite, but I know you don't like your boss, right? And with good reason sometimes. But think about it, folks. For every dollar you put into Social Security and Medicare, they match it. Yeah. So don't be too angry at your boss. Because when you're self-employed, you are your own boss, and you need to pay your own Social Security and Medicare matching. But it's not quite twice as much because you get to deduct it as a business expense. So it's a little complicated. Slide number, everything about the tax code is complicated. Slide number 5. How much does it really cost, right? This is a handout that we would use in the face-to-face class. I want you to do it online. It's called AfterTax. How much does it really cost? AfterTax Worksheet. Because you don't have to turn it in, you don't have to submit it, but it is going to be on the exam. And it is important because you walk into you work into Best Buy, and you didn't even know that the latest iPod 27.5S touch, smell, taste, feel, has just come out. And you have to have it, even though you didn't know it even existed until 5 minutes ago when you saw it on television. And it's $299. Well, you give the clerk $299. No, you got to pay the sales tax. And most places in California, it's about 8%. So that's $23.92. So out-of-pocket expense when you walk out the door, $322.92, right? Well, not quite. Unless somebody gave you that money. If somebody gave you that money, then yeah, that's all you pay. But the vast majority of us working grunts, we've got to go out and earn that money. So it depends on what we call the marginal tax rate. And we will discuss marginal tax rate in detail. But it's the next dollar you earn, how much of it will be paid in taxes. And once you've reached the middle class, that's about 25%. So federal income taxes, 25%. And then the state income taxes don't quite match. It's either 6 or 8. So let's say 7, which isn't right, but let's just say 7%. So if you're earning your own money and you're in the 25% tax bracket, you had to earn an additional $133.77 in income to be paid to Uncle Sam. You also had to earn an additional 37.46 cents or so to pay Uncle Cal. You see, when you earn money, you have two silent partners, Uncle Sam and Uncle Cal. And one's got their hand in one pocket and the other one's got their hand in the other pocket. And so you had to earn an additional $172.23 to make that $322.92 to pay for that iPod. So we're talking now $494. But wait a minute, you also have to pay about 8% to Social Insecurity and Medicare. Yee. So did you think that iPod was going to cost you over $530 or $535? You don't believe me, do you? Well, here's the formula. And this is the after-tax worksheet you're going to work on. You take the out-of-pocket expense, that includes any sales taxes and excise fees, and you divide it by 1 minus your marginal tax rate. And again, we're going to discuss marginal tax rate in detail. It's a very important number, and people they usually figure it out. And what it means is what's the next, on the next dollar of money I make, what are the taxes? So you take that out-of-pocket expense and you divide it by 1. Well, that's 100%, basically. We just make it 1. And then you add up the marginal taxes. 25% plus 7% plus 7.65%. The feds, the state, Social Security, Medicare. And you get approximately $535.08. So you thought I was exaggerating, didn't you? And now in the face-to-face class, what we do is we do the worksheet. So you can do it later or do it. You can pause the presentation or whatever and do it now. And after we do that and people go, ooh, ooh, I ask, well, what can you do about this? How do you get around this? Well, the first thing is to have somebody else pay for it, right? You don't have to earn the money. And that is often why people, before they go out into the hard, cruel world, feel a whole lot richer than they did while they were staying at home and working. Because they got all this income coming in, but they're not paying for toilet paper and toothpaste. And they may not be paying their insurance on the car. You understand? And then they get hit with the hard, cruel reality that it costs, folks. And the government is my partner. Well, what else can we do? Well, we could get paid under the table. As I said, I hear that you can work off your penalty. You can work off your prison sentence on the weekends, so that you can work during the week and pay back your tax. But don't do that. Don't do that. Plus, you could go off and live on a deserted island, and you would never have to pay another dime in taxes. But then you'd have to grow your own food and shelter yourself and make your own clothes, and you'd need medicine possibly, and you need to protect yourself, and how do you get around? Transport. You see, taxes are the price we pay to live in a civilized society. Go ahead, grumble, mumble about your taxes. But I find that the people who complain about the taxes the most are the ones who say, when something bad happens, why isn't the government doing anything about this? Because it costs money. And they put their hands over their hearts when that aircraft carrier floats by, and they haven't got a clue how much it costs to keep that thing running. And they complain and holler that we don't have 18 lanes on the freeway. 4, 6, 8 are not enough. And they don't have any idea how much concrete costs. Talk to Caltrans. They'll open up your eyes. Okay, slide number 7. Filing your federal income tax. Well, are we going to turn you into tax preparers? Almost. Stick with us. We're going to do a few slides to finish up this first part of the presentation, and then in our next presentation we slog through an entire typical homeowner's tax return. But first, let's ask, who must file? Well, not everybody. If you're single and made less than $10,150, or you're married and made less than $20,300, and then there's homeowners, householders, head of household, excuse me, a couple others, you don't have to file. But really, if you've earned income, you should file. Anyone who's earned income and paid taxes should file, if only to get a refund or to claim the earned income credit, because we're going to see that there are credits out there. And if you don't file, are they going to call you up and say, hey, Fred, you didn't file. We'll send you the amount we owe. No, you have to file. So you should do it. And you're going to find it's not as hard as people make it out to be. There are 5 filing status categories. Single and married are the 2 biggest ones, right? Single or legally separated. Married, filing jointly. That's normally how you want to file. There are a few situations where it might make sense for you to file separately, but normally you want to file jointly, unless there are knives and restraining orders and threats. Yeah, you're not talking to the jerk. Exactly. Yeah. Normally you want to file jointly. And then head of household is a special situation where you are the single person taking care of other individuals, and we'll discuss that situation in our example return in the next presentation. And then qualifying widow or widower, they treat you as if you're married, but only for a certain amount of time, I think. I got to go back and look at that. I wasn't quite sure I understood that. Yeah. Slide number 8. Which tax form should you use? Well, for many folks, especially many of you millennials working at home, still not working at home, but still living at home, and maybe you have a part-time job, you're going to school, it probably makes sense for you to do the 1040 easy. And it is easy. We have an example on the website, and we, in the face-to-face class, don't look at it until we're done with the long form. And then we say, isn't this easy? And they go, yeah, after looking at the big one. Single or married, under age 65, no dependents, not a whole lot of wages or tips, taxable income less than $100,000, no adjustments to income, no itemized deductions, no income credit. We'll discuss these in the next presentation. And so this is if you really don't, you haven't plugged in quite yet to the benevolent machine yet. Exactly. And it used to be able to use a telephone, and I don't know why they got rid of this. I guess because the internet is just so much more popular, but you could file by telephone. Very, very cool. The other 2 popular forms, are the 1040A and the 1040. Now, my advice is forget the 1040A. It's not that much easier than the 1040. It really isn't. And if you use the 1040 correctly, you are guaranteed to pay the fewest amount of dollars, as opposed to the 1040A, where you might miss a few things because they're just not on there. So if the tax program you use spits out the 1040A, well, then the tax program has decided that you won't benefit from the 1040. But in general, if you're doing it yourself, my recommendation is to use the 1040 form. And this is the one you use if you itemize deductions, which means you're a homeowner, and we'll get into that in detail in the next presentation. Now, what tax records to keep? Everything. Current forms, booklets, the previous year's returns, the W-2 forms from your employer, the 1099s, that money that you've been paid, 1098 money you have paid, receipts, documentation, expense reports, expense documents, everything. And how long should you keep them? Well, what do you think? And I asked this in the face-to-face class, and somebody said 3 years, 5 years, 7 years. Guess what? It's a lot harder than that. The IRS says that you should keep your records 3 years from the date the return was due or filed, or 2 years from the date the tax was paid, whichever is longer. So in other words, that usually means 3 years after you've filed it, 3 years later, unless you had to pay it later on, and then you have to wait an additional 2 years. But then they also go on to say that you should keep some records longer. But they don't say which records, and they don't say how long. Thanks a lot, guys. Oh, I says keep them forever. And so now my wife and I have these boxes of tax receipts, and I don't know what to do with them. And every year I think I should scan all these things in and put them on a CD and save them electronically. And I have a scanner and I know how to use it. And then I look at all the documents and I go take a nap. Yeah, it's an issue. I don't know. So that was the preliminary. Those were the preliminary things we want to get out of the way, because go back and make sure you can do those after-tax calculations. As I said, they're going to be on the exam. But more importantly, they really do help you think twice, 3 times before you make that big purchase, or even those little purchases. Because every time you make a purchase, Uncle Sam and Uncle Cal, yeah. In our next presentation, as I've already mentioned, we are going to slog through. We are going to make our way through, folks. You better be ready. A typical homeowner's tax return. So you're probably going to want to print it out, and we'll get to that in the next presentation. See you in our next presentation, dear students.